All right, here we go. Sunday night. What is the date? Sunday, July 28th. Bitcoin block height. We have block height of 854,445. Current Bitcoin price is $69,536. I think MicroStrategy is trading at $1,800 plus overnight, which is great. Big pump upcoming from the potential Bitcoin conference. I think everything was really positive. I think there are some people that are not seeing what happened this weekend at the Bitcoin conference as bullish, which is just crazy to me. You've got multiple political parties talking about Bitcoin, like having a Bitcoin narrative, period, which is really interesting and pretty fascinating. I think everything I've seen so far was really positive. I'm excited to see what comes out over the next couple of weeks. But anyway, wanted to pop in, provide a little bit of update. I haven't talked to you all solo in quite a while, so wanted to talk about some of the things that I'm thinking about, coming fresh off of some vacation and had a little time to think. So got some cool analysis want to share with you all and talk about a few things. So the first thing I'm going to start with is this Donald Trump keynote address. And I think there's one key component of this keynote address that a lot of people aren't talking about, which I think is probably the most important part of the entire keynote address. I'm going to play it real quick. It's 15 seconds, and here we go.
We'll be creating so much electricity that you'll be saying, please, please, President, we don't want any more electricity. We can't stand it. You'll be begging me, no more electricity, sir. We have enough. We have enough.
So that, let's stop sharing. Bitcoin is energy money. Artificial intelligence needs energy. If you're thinking about the cross section here, both Bitcoin, proof of work, and artificial intelligence need energy production. Having somebody come out saying that we're going to try and create energy very cheaply and be energy dominant is incredibly bullish for Bitcoin. Having cheap energy and more mining nodes, more infrastructure, that leads to a more secure network. That's probably the most bullish thing of the entire speech, in my opinion. Obviously, talking about strategic reserve and a lot of the other positive conversations from RFK and Donald Trump, I think, are very interesting, to say the least. So I think that's really exciting. You can't ignore it, right? Energy is incredibly important for Bitcoin. Having Bitcoin mined in the United States is incredibly good for America. I think that's a good move. And thinking about the macro environment, right? If artificial intelligence is going to be as pervasive as everybody thinks, we need a ton of energy in order to be able to produce artificial intelligence and the computing power associated with it. And one benefit is the correlation to Bitcoin as well. So all really positive from my perspective. All right, enough of the politics. That's not an endorsement at all. It's just really, I do find it interesting. Every political presentation is a chess move in the game theory of a political race. So it's really, really interesting to me to watch these things play out in real time. Okay, now switching gears over to MicroStrategy, which is a little bit more fun. There's been a lot of conversation about this multiple on NAV. It's coming up again, and people are hesitant to think that the price of MicroStrategy may go beyond this kind of 1 or 2 times multiple of net asset value, which I think is, if you're going to trade on that, I think you could miss the boat massively here. I think it's very similar to, trading Bitcoin. Like, everybody's a trader of Bitcoin until they realize that they shouldn't trade their Bitcoin. They should just hold on to their Bitcoin forever. I think a very similar concept is playing out with MicroStrategy, and I think the game theory associated with it is a little bit different, and it's important to take into consideration all of the fundamental nuances and the design of the stock market and how equities function from a design perspective. So I did a little bit of analysis. I'm going to share it with you. So this is the MSTR tracker that all of you probably know and love. So this is mstrtracker.com. This is the MSTR tracker. You could look at the daily close of net asset value over time relative to Bitcoin. You could look at a linear regression. You can look at a second order regression, which is kind of an exponential regression, taking this data into consideration. And then the most recent latest data point is this red data point. Everybody has a lot of fun with this because you can extrapolate this out and you could go see it, okay, if the net asset value premium is 4.7 at $150,000, what would the price of MicroStrategy be? So you can see at these different points, what would the value of MicroStrategy be based off of this analysis, right? It's one good perspective. Now, I wanted to break this down a little bit further. So I wanted to dive into what was going on with some of these data points, right? So there are some macro environments and some macro things that are happening on any one of these data points. So I wanted to break it down into a time series of different points in time with different categories, right? Categorizing what was happening at the moment. So doing a little bit of a forensic analysis on the history of what was happening in the trading environment over the last 4 years based on MicroStrategy and the price of Bitcoin, et cetera. So obviously pre-Bitcoin purchase, we're going to keep this down here. This is over here. This is the blue dots. TTM, so this is trailing 12 months earnings. So taking a step back, the question I was asking in order to start this thesis, I was curious as to if there are more people investing in MicroStrategy today than there were back in 2020 and 2021 when MicroStrategy announced their initial purchase, then why is MicroStrategy today trading at a lower multiple on net asset value than it was in the past? You'd think that if there are more retail investors and more investors, period, that are investing in MicroStrategy today, there would likely be more compression on net asset value, and you'd be seeing a higher net asset value than you would have seen back in 2021. So that was the question. I asked what was happening in 2020 and 2021 when MicroStrategy was trading at a higher net asset value. And I think it's based on this analysis, I think it's actually pretty clear to see what was going on. So the trailing 12 months earnings were positive. So this is a really big component here. MicroStrategy, when they first started buying Bitcoin, they were included in the S&P 600 index. And I'm going to come over here to this, right? So MicroStrategy, they were included in the S&P 600 index. So the S&P 600 is basically like a small S&P 500. I think you have to have a market cap between 1 billion and 5 billion, and you have to have positive earnings, and you got to hit all of the other same thresholds as the S&P 500. It's just for small cap stocks. So MicroStrategy at the time had 578,432 shares that were held by the top 3 S&P 600 indices. So in 2021, that represented about 4.5% of the total shares outstanding, which is a very significant amount of shares for any stock, right? I mean, it's more than executives hold, right? So what happened? Why did MicroStrategy get kicked out of the S&P 600? And there's a few things that were going on. So in looking at the earnings per share data, MicroStrategy started buying Bitcoin in, I think it was like September of 2020. They had positive trailing 12 months earning per share, and their market cap was around 1.1 billion. So they were perfect for the S&P 600. They fit right into the category threshold for market cap. They had positive earnings. They had a good business model. They had positive earnings trailing 12 months for like the last decade. And now coming into a new digital asset environment where they have to take the markdowns on their digital assets at the lowest price at that point in the quarter, that resulted in large negative earnings, technical earnings from an accounting perspective, while the value of their assets were increasing. So MicroStrategy had trailing 12 months earnings positive through January 28th, 2021. January 28th, 2021 was when the Q4 2020 earnings came out, which led to negative earnings at that point. So it's the end of Q4 2020. They started to get negative trailing 12 months earnings. So at that point, they no longer qualify for the S&P 600. But there is a little bit of a buffer. Like if you start to go into trailing 12 months earnings negative, there's a little bit of a buffer where you may get another quarter or two to fix your earnings and get back into positive earnings. However, at the same time, MicroStrategy stock was ripping, right? It was increasing pretty drastically, going from 1.4 billion up to 6.8 billion. So not only did their earnings go negative, and so they were disqualified from negative earnings, the market cap went super positive, which kicked them out from a market cap perspective. So these two things were kind of working against them, which resulted in MicroStrategy being removed from the S&P 600 on September 8th, 2021. Right here when the market cap was at 6.1 billion. Now, this was before Bitcoin had its second peak. And you'll notice, I think it was maybe November of 2021 or something like that. If you go back and look at the MicroStrategy stock price history, MicroStrategy didn't have a second peak when Bitcoin had its second peak. And the reason being is 500,000 shares, 578,000 shares were sold on the market as they fell out of the S&P 600. So going back to this MSTR NAV analysis over time, you can see, so the orange dots are when they were included in the S&P 600. So you can see this multiple on net asset value kind of averaging in the, 3.5, 4, even a little bit higher back at a lower Bitcoin price, 5 or 6. And as the earnings turned negative, you can see the multiple on net asset value start to deteriorate, starts to fall below 3. And then as they clearly no longer qualified for the S&P 600 from a market cap perspective, and they had a very large negative earnings quarter. After Q1 2021, they had a negative $11.4 earnings per share, wiped out all of their positive earnings from all historical quarters for the past 3 or 4 years. And so they clearly no longer qualified for the S&P 600. So again, the NAV multiple compressed and went a little bit further down. And then once they were removed from the S&P 600, they started trading more near a 1 times multiple on their net asset value. And in fact, there were many trading periods where the MicroStrategy was trading at a discount to the assets that they held on their balance sheet. Moving forward, so these red dots are when Saylor was selling 400,000 shares and the Bitcoin ETF was released. You can see there are still some trading periods there where MicroStrategy was trading at less than 1x. These yellow dots are post-Saylor selling 400,000 shares. So you can see once he was done selling, the multiple started to go a little bit higher because there's a lot less liquidity, less shares that are trading at the margin. You could literally see it. It's jumped. These are these yellow dots that are kind of clustered over here. And then this last set of kind of brown dots is MicroStrategy announced to add it to MSCI index. And you can see, again, the clustered dots are clustering a little bit higher. So I like to think of this as like a layer cake, where you've got these different layers of support and different layers of buyers that are going to be holding for longer periods of time. Now, moving forward, if MicroStrategy is included in QQQ and S&P 500, you're going to have higher layers of support that are buying MicroStrategy at any price. And they're not selling MicroStrategy, right? Like, you got to think about the players in the game. The players that hold MicroStrategy shares, there are going to be people that are going to trade this relative to Bitcoin forever. And it's, in my mind, it's a little bit of an inefficient trade from a tax perspective, but also from a timing and potential missing upside perspective. And then there's tax implications as well. So if you're doing this on a short term, you got to take into consideration any short-term capital gains tax that you need to pay, as opposed to just holding for the long term and paying long-term capital gains tax. So you got to think about the layers of support and the historical and the future layers of support that are going to support this, and what the decision-making is going to be behind the scenes. Any S&P index, any index that's holding these shares, they're not going to be trading this based on its Bitcoin price, at least not for the foreseeable future. And, there are some other people that say, that are the Bitcoin maxis that just buy Bitcoin and hold it in cold storage. Well, I think that's fine. I think that's a good approach. I think everybody should have Bitcoin in cold storage and go through that exercise. However, there's this concept in game theory where if you know when the end of the game is, that will change your strategy today. If you don't know when the end of the game is, and if the game is indefinite, then that also changes your strategy today. So for the foreseeable future, more money, more dollars are going to be printed, but the concept of the dollar is not going to go away, at least for the foreseeable future, for the next decade, the next 20 years. And I think the dollar will be around for quite a long time. And if you know that the dollar is going to be around for a long time, and the fundamental structure of the equity market, if that's going to be around for a long time, for example, if you have banks that are buying S&P 500, if you have insurance companies that are buying S&P 500, if you have investment advisors that are buying S&P 500, if the fundamental design of the financial market is how it's going to be for the next decade or 20 years, which I think it'll be really hard to shake a lot of that, you've got to think there are going to be passive investors that are buying any equity for the foreseeable future. So with that in mind, I personally am taking a hyper long approach, understanding that there's going to be volatility just in general, but there's going to be more baseline support over time. And I wouldn't be surprised to see MicroStrategy get back to trading somewhere up here with the inclusion of QQQ or S&P 600. Why? Because QQQ is the 5th largest trading ETF in the world, and the S&P 500 represents 3 out of the 5 largest trading ETFs in the world. So it's pretty massive. And I've got a little bit of math to show on actually how massive that is. So on the left-hand side, this is all equities included in the QQQ index right now, and their corresponding weights within the QQQ index. And what I wanted to show is that if we assume, so MicroStrategy today is ranked the 100th largest NASDAQ global equity. Any additional increase in market cap increases their potential weighting allocation to QQQ. So, right, if we go at 100, right, if they get included today, which the inclusion in QQQ happens in December, and I've got that up actually as well. I'll share that. So we've got a trading calendar here. So NASDAQ 100 additions and deletions are announced on December 13th, 2024. I believe the valuation for NASDAQ inclusion happens at the end of November. I think it's the last trading day in November. So I think it's November 29th. It might be November 27th. So we want to keep an eye on those days, November 27th, November 29th, around that time. And we'll find out when they're added on December 13th. And then the NASDAQ rebalance happens on December 20th. So it's a quick turnaround, and we won't hear anything until November or December. So don't ask me. It's November and December. Now, let's go back to the math, because the math's fun. So if they didn't grow at all, if they got in at number 100, their weight in the index would be 0.13%. QQQ has 283 billion in assets under management. So at a 0.13%, this represents a $367 million purchase from QQQ to buy MicroStrategy. This would represent about 209,000 shares, or about 1.1% of the shares outstanding. Now, a lot of those shares purchased for these index funds will be purchased over time. If it becomes very clear that a stock is going to be added to an index, you'll see that going back in history, a lot of these shares are front run. Like most index inclusion is front run. So if anybody's trying to do analysis and you're looking at how stocks are impacted by index funds, don't look at the date of inclusion going forward. Look at the months prior, because all of this information is publicly available. Like everybody can find, like anybody who's doing any analysis will be able to find out that, oh yeah, MicroStrategy is going to qualify. I'm going to front run any passive investor that's buying the QQQ index. I mean, this happens on all stocks, and I'm sure it's like done in an automated fashion. And it's super easy. So if you're going to look at analysis, look at the months leading up to inclusion. So this is if MicroStrategy was ranked at 100 in December, which I think we all believe that the market cap is going to rocket here in Q3, Q4. And if they get included at, let's say, a 50, let's say they're ranked 50th. So this would be around what company? Around the size of Airbnb or PayPal or CrowdStrike. Oh, that's funny. So if they're ranked 50th, which I think is, what is that from a market cap? PayPal's market cap got a $61 billion market cap. So about a $61 billion market cap, that's 3x from where it's at today. So that's trading about $3,000 in December, which I think is very doable. Then MicroStrategy would have 0.42% allocation, which would represent $1.1 billion allocation, 678,000 shares, or about 3.8% of the total float. Again, this is just QQQ. QQQ is the 5th largest index in the world. The largest is the S&P 500, which is 3 of the 5 largest indices in the world. I think MicroStrategy will get added to S&P 500 probably in Q2, Q3 2025. Likely at a materially higher market cap, especially if they get the benefit of QQQ here. And with the release of FASB earnings in 2025, I think there's potential to get added at a significantly high market cap. So a lot of positive things on the horizon. I think the multiple on NAV is really helpful to view from a historical perspective, looking at like the forensics of what was going on, like what was happening, and why was it trading higher. Like it's important to think about. It's because there was a lot of support from passive investors that had no idea that MicroStrategy was buying Bitcoin. And then once all those were dumped, then people were trying to rationalize, like, how do I price MicroStrategy? And it's a bunch of retail traders and people that love Sailor, people that love Bitcoin. And then there was a lot of FUD with FTX. A lot of things were happening. But everybody thinks they are geniuses trading Bitcoin and MicroStrategy back and forth in this territory. And in my opinion, a little blind to the potential upside that could happen very quickly with any passive inclusion into QQQ or S&P 500. It's not going to be linear. I don't think it's going to be exponential. it just might be confusing and hard to rationalize. But if you come back to the fundamentals of how the design of the market works, you might be able to make a more rational decision for the long term. So that was pretty interesting. The other thing I wanted to point out, which I think is really fun, is Tesla. Everybody loves to talk about Tesla. So Tesla was added to QQQ back in July 10th of 2013. So let's look at what happened to Tesla in 2013. In July of 2013, Tesla was added to QQQ at a $15.8 billion market cap. And as you could see, the price of Tesla went to $34 billion market cap. So the market cap doubled in a year. Doubled in a year. And guess what? It looks like somebody was probably tipped off a little bit that the QQQ inclusion was coming, right? The price of Tesla went from a $4.2 billion market cap to about a $14 or $15 billion market cap before inclusion. This is what front running looks like. People figure it out. They're going to get added to QQQ. Maybe it was because they finally got over this market cap threshold of $4 billion. Prior to that, they were just trading in the $3 billion territory, $2 billion territory. But then they got up to 4. And then maybe I think that might have been the threshold to get to the top 100 at that point. And then at that point, you go from 4 to 23 to 34 billion in 2014. And I think it's really funny if you look at this article back from 2013. It says Tesla is also a controversial stock. Critics say the valuation is stretched. I think Tesla's trading at 800 billion right now. So it's just kind of funny. You know, you can't really take whoever's writing these articles probably has no idea what they're doing, which is just kind of funny. Anyway, this is very possible. And Tesla didn't own any Bitcoin at that point. So the volatility potential is there. What was going on with Tesla? Tesla had a technological advantage. They had a head start for electric cars well before anybody else. Their electric car was faster than any gas-powered car. And it was very clear at that point, even Elon Musk was ahead of the game, and he was very forward-thinking and a technocrat. So the reason the price didn't go down after QQQ inclusion is because people were seeing the long-term potential trajectory of Tesla, right? They were seeing Tesla as a $200 billion company. Why would I sell Tesla as a when it's priced at $34 billion when I think it's a $200 billion company? And I think people need to stop and think about MicroStrategy in that perspective as well. They're trading at $28 billion right now. Are you going to tell your grandkids that you sold MicroStrategy at $60 billion when 20 years from now they're trading at $10 trillion? And I think that it's worth considering that probability. One, that Fiat is not going to disappear in the long term. Two, there's a monopoly and a technological advantage from having more money, more sound money than any other company in the world. And three, the design of the financial market, the passive investors are coming with QQQ and the S&P 500. And the setup is monumental with short interest getting included at very high relative market caps, the potential going into the election with the price of Bitcoin rocketing. A lot of really positive things. So I'm going to end it there. 30 minutes was plenty. And yeah, it's going to be a fun 14 days. I think the next couple of weeks is going to be really fun with Bitcoin based on the coattails of the Bitcoin conference. Hopefully it's really positive for MicroStrategy. I think we'll probably break 2,000 before we get to stock split. So, oh, we also have a stock split coming up, which is super fun. Gonna be awesome. Anyway, that's all I got. And I'm gonna sign off and go to sleep. Catch y'all later. See ya. Oh, also, none of this was financial advice. We'll catch y'all later. See ya.